video of it. I watch every now and again. I think I have it on my phone too.
Very cool.
Yeah.
And you know, it's interesting. I've been getting these referrals for loans.
Yeah, all of a sudden they're coming in.
Yeah. That's because of the the contacts that we're making.
Mom's getting some, you're getting some, and
Yeah.
Kevin's been having a banner month. So no David today.
No, he didn't come in. I guess going out to lunch with you yesterday just took the wind out of his sails.
So if he was like, he's single, he's dating, he's I just nothing's going on. I guess his Match.com isn't working, and
Oh, was that
nothing's
on
happening
that?
with that.
No.
Yeah, and it's like although I know he's a tough kind of date. 'Cause he's got
Yeah.
really rigorous standards, and he's he's an interesting guy himself.
Mhm.
He's, one date with him, you soon realize that he needs to have things a very specific way. I'm sure you've run into that more than a few times.
I mean, but once you find that perfect person, it might just be
Yeah.
match made in heaven.
Yeah. So I thought I would, at the very least, in the first segment, kind of provide a broad overview of how companies like Pacific Private Money work.
Okay.
And then later, maybe in the next segment, we can talk about examples of deals, like a deal of the week, and I can, and again, get into an example of why a lot of people use us. But and I'll cover a little bit of that in the beginning, but I won't do it with specificity of a particular deal. But just because so oftentimes in shows, there's just a snippet. There's a question about the fund. I talk about the fund. I don't really get to talk about the company as a whole.
Yeah, the
And,
business.
Right. So, what is the business model of private money lenders and private money loan originators? And I was also going to touch on the fact that the good to society, that people who invest in the mortgages that we originate, the good they're doing for a lot of people. This helps people to get real estate they normally couldn't get. It helps contractors and rehabbers who wouldn't have access to capital normally because of their particular financial situation buy and remodel homes. So the private lending industry was a catalyst for the real estate recovery because it took
absolutely.
a non-performing, dated homes, thousands of them just right here in the Bay Area, thousands of homes, remodel them into like new turnkey houses for first-time and entry-level home buyers.
Definitely stimulated the economy.
Yeah.
Not just the real estate economy.
So it's certainly not something that investing with a hard money lender. Oh, those guys are predatory. You shouldn't do that. That's it's exactly the opposite of doing something
it's not
that's
a moral evil. It's
right.
actually,
Right. Exactly. So please do chime in. Like that moral evil is actually really perfect. That's because some might
might just start off with that.
might think that the moral evil.
To say, Mark, tell us why hard money, private lending is not the moral evil. All right, ready?
Yes.
There we go. Welcome, you're listening to The Best of Investing on Talk 910. I'm your host, Edward Brown, and I'm proud to house my co-host, Mark Hunt of Pacific Private Money, one of California's fastest growing mortgage investment firms. Our phone number is 888-912-1190. Use that number to answer the trivia questions for 3 vacations given away during this show. Now, the vacations are not sponsored by the radio station, but by Lighthouse Resort and Marina, which is located about 1 hour northeast of San Francisco. And those vacations are free. Their only request, a $75 cleaning fee to cover the housekeeping expenses. Today's trivia theme is old TV show intros.
Nice.
Okay, and I know you'll get a couple of these. Our website is bestofinvesting.com. And check us out on television, Comcast Channel 26 and AT&T Channel 99. Saturdays noon, Sundays at 6 p.m. So, Mark, I want to get right into this with you. Tell us why private lending is not the moral evil of society.
Well, what I want to share with the audience today, and largely because, for listeners to this show, we like to bring in, topical real estate issues of the day. And I got to tell you, as I was looking this week for stuff, it's really the same old news. Real estate is pretty healthy right now. We don't know when the next cycle is going to hit. Homes are appreciating still. The latest Case-Shiller report came out at 10% year over year for the year end December. So in 2015, according to Case-Shiller, Bay Area home prices are up 10%, and that has not slowed down yet. And so, rather than just keep beating the same stick over and over again, mortgage rates are low. They're below 4% again. Gas is still incredibly reasonable. We just had a little spike in there. Just not a lot of new news this week, aside from Trump, and I don't really want to make this a political show this week. Maybe we can wait until after a few more primaries and get down and nitty with that one. But what I would talk about today is kind of like on a macro level, how the private lending loan business model works. Or more specifically, how companies like Pacific Private Money, who are private money loan originators, sometimes called hard money loan originators, how that business model works and why it is good for society, as opposed to what you brought up earlier, like a moral evil. Because I think a lot of people still today believe that what companies like Pacific Private Money do are we make loans to people who come to us as a lender of last resort. They have horrible credit, or they've got, they're essentially their back is against the wall. In other words, they're in financial distress of some kind.
Are you telling me that you don't twirl your mustache and put people under railroad tracks?
That's right, like Snidely Whiplash. Right?
That's right. They do right on the nose.
If you're familiar with, if you've been familiar with the hard money or hard money loans from, say, 10, 15, 20 years ago, that used to be true in hard money. And again, not all hard money loans back then. Some of the loans we're going to talk about, and some of the people who come to companies like Pacific Private Money, we'll talk about as the show goes on, as to why people come to a company like Pacific Private Money, who charges essentially on average 10% interest rate for a loan. Why would anybody do that? You must have horrible credit, or it must be a really bad loan or a risky loan.
Yeah.
And what you're going to hear in the show today is that that's actually not true. The business model in 2016, thanks to what happened in the last real estate crash in 2007, 8, and 9, and the resulting reforms in the banking industry, and because it's so much harder to get a bank loan today, and I'm going to give you some examples from my own personal experience. I'm right now going through refinancing my home, and I'm going to tell you stuff that you're just not going to believe in terms of how incredibly difficult it is to qualify for a home loan today. And I'm a guy that has a thriving business. I make a really good income, and I am struggling weeks and weeks into a refinance of my home because I want to take advantage of these great low rates. But I'm going to share with you why one of my best customers comes to me and won't go to a bank, even though he's got a great FICO score and makes over $1 million a year.
Let me add on to that. I have been going through my refinance since November. I'm serious. November.
Well, then
December,
you and I are
January.
probably going to have some good war stories to talk about. But getting back to the topic, how does the private money lending industry work? Well, what's important to note is that there are two clients that we serve, that companies like Pacific Private Money, and there are hundreds of companies like Pacific Private Money throughout California and many more throughout the country. It's a thriving business right now, and it's thriving because of what's happened to banks and what's happened in conventional lending, and even more so now today because of what's happening in the stock market. We serve two clients. We have our borrower clients who come to us because they can't get the bank to make them a loan. Maybe they need the loan to happen really fast and the banks can't accommodate that need for speed, or as we'll give you some examples of why it doesn't qualify for a bank loan. Our other customers are those people whose money we're actually lending out. We call those our investor clients. And I've got over 250 investor clients, and that number grows by the week. People calling as a result of hearing us on the show, seeing our other advertisements out there, and they hear about this earn 8% or more on your savings and IRA accounts through the mechanism known as mortgage investing. It's an alternative investment strategy. You may have heard the term alternative investing, and that usually includes things like real estate or real estate secured investments. And people who make their money available to us are participating in what we call mortgage investing because their money is used to fund these what are generally short-term loans that we make to people here in the Bay Area who have a specific need and the bank can't fulfill it. And it really isn't. It is so 180 degrees different from being a morally evil thing because you're not, funding predatory loans to people who are likely to lose their home or end up in bankruptcy. In fact, that's exactly the type of loan we don't make.
Yeah.
There are people like that out there who need a desperation loan, a payday loan, stuff. Most companies like Pacific Private Money don't make those kind of loans. We steer clear of that.
A lot of times it's just going to be you want to lend money to somebody who's going to either make a lot of money with your money or is going to save a lot of money with your money.
Right. In fact, we serve what we believe to be a social good and a social need. In fact, I believe it's the private lending industry that was a major catalyst for the real estate recovery that started to occur in 2012, 13, 14, because we were the only ones out there providing the capital for the people who were running around buying distressed properties, foreclosed properties, properties that needed to be remodeled, properties that were in terrible condition. And again, the stories behind them, while they were sad because people were losing their homes, people were getting foreclosed out, the fact of the matter is many of those homes were lost because people refinanced and refinanced and refinanced and then couldn't afford the payments anymore. The valuations were not real, right? So thousands of homes just here in the Bay Area, many of them built in the 40s and 50s, many of them had never been remodeled. I mean, I walked through hundreds of homes that I made loans on in 2011, 2012, 2013, and the condition of those homes, they weren't sellable.
Yeah.
And I would make loans through Pacific Private Money to rehabbers, flippers, and contractors who would turn these homes into gorgeous, turnkey, like new homes. And as you drive through neighborhoods today, throughout the Bay Area, and we probably made more loans in the city of Oakland than any other city because there's more single-family homes in Oakland than any other Bay Area city, and there was a lot of distressed property and a lot of foreclosures happening, unfortunately, in Oakland. And there were streets that quite frankly, I was not very comfortable driving through because of the condition of the real estate in 2009 and 10.
Yeah.
And by 2013, 14, almost every home on the block had been turned over and revitalized and refurnished. And first-time and new home buyers were going in there.
Well, they're also talking about gentrification already because too much San Francisco. San Francisco is too expensive. People are moving out to Oakland.
Well, and whether and gentrification can have a negative connotation. Well, you're pushing out the older inhabitants and bringing in the new, the people with money, and that's not necessarily what I'm speaking of. Because again, to take a home that's distressed and to turn it into a like new home with all new appliances and new walls, new flooring, and repainted new carpeting or hardwood floors, and then have that available on the market. I mean, that's a good thing. And so we've revitalized neighborhoods, and so companies like Pacific Private Money were instrumental, in my opinion, in making that happen. And the people who were brave enough in the beginning, and nowadays it's not so much. It's becoming more and more known, and so it doesn't require as much of a leap of faith to invest in a note. Now we've got thousands of loans under our belt, as do many other private lenders. It's becoming more and more popular, and we'll talk about some of the ways that you can participate and earn 8% or more on your money in the next segment.
Very good. Okay, we're going to cut to a first commercial break here. Make a couple of mentions here. Let's see. If you wanted to go see this thing called Pageant, it's at the George and Sonia Vacation Theater in Walnut Creek, which is at the Hoffman Theater, basically, or excuse me, at the Lesher Theater of Arts in Walnut Creek, and that's going to go through March 6th. It's kind of neat. The judges are selected from the audience, so check them out.
That is such a neat venue, Edward. You and I and our lovely wives went to watch a Beatles show last weekend, and I had not been there before. There's 3 venues in one. I wish they had one like that over here in Marin.
I know.
So we should, we're going to go see the Led Zeppelin review in a couple of weeks coming up.
Exactly.
Tribute band to Led Zeppelin. What a fun place. Really, really nice. That whole area of Walnut Creek is really
beautiful.
It's beautiful.
checked
Yeah.
out Scott's Seafood,
That's
excellent
right.
restaurant there. So
walking distance to the theater was fabulous.
it was great. And so in continuing on with that, Led Zeppelin's going to be playing March 26th, and Pink Floyd is going to play March 12th. And again, these are tribute bands, but it's a great venue at the Lesher Theater in Walnut Creek. Check them out. Okay, so now we're going to cut to our commercial break, and the theme is old TV show intros. All right.
Let's see if I can get this one.
Okay, the first two are kind of hard. The second one's easy. All right, so you have to stay through the whole show to get to the easy one. A man is running down a dark alleyway. He stops and is joined by another man and then a woman. All three are then seen running towards the viewer. Which show was this from? Okay, now these are old TV shows, and I'll say this is from the late 60s, early 70s. All right, the first caller with the correct answer wins a free 3-day, 2-night stay at the Lighthouse Resort. Call 888-912-1190. That's 888-912-1190 to answer this question. Which old TV show intro started a man running down a dark alley? He stops and is joined by another man and then a woman. All three are then seen running towards the viewer. Which show is this from? Stay with us. You're listening to The Best of Investing with Edward Brown and Mark Hanf. And when we come back, Mark's going to teach you a little bit more about private money and how it works and how you can invest. Okay. I want to get this exactly this many seconds here.
Good.
That. Save Z file. We had Al Adels on.
Oh, did you?
Yeah.
Nice.
He's such a nice guy.
Yeah.
He goes to every game.
Yeah, we see him. They always have shots of him sitting in the seats there behind the guys. Yeah, it'll be fun to watch tonight.
Yeah. I'm going to record it just in case for whatever reason I miss it. Did you watch the game that we missed by going to the Beatles show?
The whole game.
Me too.
Yeah, and then I went back and watched the last quarter again because it was just so
That
good.
was awesome, and I was so glad that I added an extra hour onto mine.
Oh yeah, totally.
Because
You
I
always
screwed
got
that up
to.
before. Yeah,
Yeah, always.
big mistake. I mean, I've missed World Series exciting games because of that.
Oh.
I mean,
Gotta have that hour.
but yeah, sometimes two. Okay, here we go. Welcome back to The Best of Investing. I'm Edward Brown, your host, along with Mark Hanf, president of Pacific Private Money. When we cut to the first commercial break, we asked this trivia question about old TV show intros. A man is running down a dark alleyway. He stops and is joined by another man and then a woman. All three are then seen running towards the viewer. What show was this?
Is that Mod Squad?
Yes, very good. I thought that was a hard one. Very good.
I
Okay.
had to think about that. At first, thought Man from Uncle. No, that's not it.
Yeah, because there's no woman in that one.
That's right. Yeah.
That would be the man and the woman from Uncle. Okay, Mark, continue on about hard money.
So we're talking about the private money lending industry, also referred to as the hard money lending industry. Although I will say most companies, like mine, like Pacific Private Money, we tend to gravitate now more towards the name of private money lending, because the whole hard money industry did have a fairly negative reputation, particularly 10, 15, 20 years ago when it was largely unregulated. And again, that's not the case today. In fact, most of those hard money lenders aren't even in business anymore. Those that survived are doing a different kind of loan these days. They're not making the types of loans they made in 2000. And the reason why they're not, quite frankly, is because in the 90s and the early 2000s, when banks were lending to pretty much everybody, the types of loans that were left over, the kinds of loans that you couldn't get,
Sure.
the bank wouldn't do, were the types of loans that were, largely people in distress or people that, or maybe development projects or other risky types of loans. Now, the reason that people come to companies like us are not because it's a risky loan or it's we're the lender of last resort. It's because they have a need for speed, or they don't qualify for bank financing. And so let's talk about some of the types of loans that they come to us for. And right now, in the last 12 months, probably the single most popular loan we've been originating for people is what we refer to as the bridge loan, to buy another primary residence when you're currently living in one. And because of the way the market is right now, and inventory is so tight, and it's really hard to find that next property. Actually, it's easy to find it because you just look on the MLS and go, oh, I like that property.
Yeah.
But it's hard to get into contract because there's a lot of competition, and people are losing out, making offer after offer after offer. So what they don't want to do, which was really common in periods where there was either a buyer's market or there was plenty of inventory, and that is you used to be able to go, find a home you want to buy, make an offer on it. If it gets accepted, you have a contingency in there that, well, I got to sell my house first,
Yeah.
and then I'll move into this, or then I'll close the purchase and move in. Well, that's almost impossible to do nowadays. You're not going to get into many contracts with a contingency. Plus, you really don't want to sell your house first because then you're going to have to move into maybe an expensive furnished apartment, assuming you can even find one. Because
Yeah.
right now, apartments are hard to find. So, what's a person to do when they want to upsize or downsize? And you go to the bank thinking, well, I make good income. I can just, and I've got a down payment, so I'll just buy the next home before I sell my current home. Well, I will tell you that an incredibly large number of people are discovering these days today that when you try to do that, you go to your bank and apply for basically a second home loan, you come to find out, even though you make a lot of money after they go through all of the origination and all of the requirements they have for debt to income ratios, and they cut down your rental income on your rental properties and this, that, and the other thing. Before you know it, they say, yeah, I understand logically why you're telling me that this is an easy thing for you to do and nothing's going to happen, everything's going to be fine, you make plenty of money. It doesn't underwrite. We can't make you the loan, I'm sorry. And again, I personally have had that experience. And so I feel for people. So what's a person to do? Well, what a person to do is to go to a company like Pacific Private Money, where we can make you a fast, no-nonsense bridge loan with no prepayment penalty. You're going to pay fees and a higher rate of interest for the time that you need that money, which can be anywhere from maybe 6 weeks to 2 months to 6 months, however long it's going to take you to sell that other home and refinance us out. It varies, and we make hundreds of these loans now, and the stories always vary, but that's probably one of the most common ones. And other types of loans we make are for people who, again, because the market's tight, they want to make a very aggressive offer. They want to go in and say, okay, I'll offer you, Mr. Seller, $1.2 million with no contingencies and a 14-day close, or maybe an 11-day close, something like really aggressive because they're tired of losing out to the all-cash buyers, right?
Yeah.
So they make an aggressive, like an all-cash offer, and then they come to us and we close the loan for them, and then they go right away to their bank with a mortgage broker and apply for a conventional
Yeah,
loan.
so from the seller standpoint, it is an all-cash offer.
Right, exactly, no contingencies.
Yeah.
So those are a couple of examples, and when we talk about Deal of the Week in the third or fourth segment, I'll give you even another example of someone who is someone who comes to me before he comes to the bank, and again, for reasons that you'll understand are clear. From the investment point of view, so you're someone out there that's looking at your investment portfolio, the idea of making a consistent 8% plus on your money sounds incredibly compelling, even if you're not planning on getting out of the stock market, and I would never suggest to anybody that in a balanced portfolio, you should never consider doing that. But as you want to add to your portfolio, as you want to diversify, as you want to add alternative investment opportunities that can get you higher rates of return, mortgage investing is becoming much more readily accepted and even more understood by a lot of financial planners, more so than in prior years. One of the things that if you have an IRA, many companies like Fidelity or Schwab or Merrill and others, many of them now have what's called an alternative investment platform. They use the acronym AIP, Alternative Investment Platform. And one of the two ways that you can invest with Pacific Private Money include our mortgage pool fund called the Pacific Money Fund. And it is accepted right now on the Fidelity Alternative Investment Platform. And in fact, we have applied for acceptance on other common alternative investment platforms. So that is something that's new and recent in the last couple of years. And so talking about the two ways, one is through a mortgage pool fund. And a mortgage pool fund, think of it like a mutual fund of real estate secured notes. At the Pacific Private Money Fund, we only have two asset classes in that fund. One is notes, local real estate notes that we've made to our borrower clients, and cash. Real simple. We're not buying real estate. We're not flipping real estate in the fund. We're not investing in other types of assets. It's simply a pooled fund of mortgages. The other way you can invest is something that's we've talked on the show many times over the years, and that is just simply known as trust deed investing, which is also sometimes called note investing or mortgage investing, and that is where you invest in one specific note. You know who the borrower is, you know where the property is, you have, if you want, your name on the note as the lender and the beneficiary on the deed of trust, and that is something that is, again, becoming more common, although for people who haven't done it before, I always recommend the mortgage pool fund as a way to do it. It's much more convenient. There's many benefits to investing in a fund rather than an individual note. But
you just get to be a coupon flipper at that point.
Right. For note investors, if you're an experienced note investor and you're not on our distribution list, I encourage you to call or email us. Go to our website at pacificprivatemoney.com, pacificprivatemoney.com. All our contact information is there. It's easy to get in touch with us. There's a form you can fill out. You can call us on the phone, or you can send us an email and ask to get on our list. We like working with experienced note investors, experienced trustee investors. Like I said, we've worked with over 250 clients presently, and we're always looking to add more to our database. If you're inexperienced, I would highly recommend you check out the Mortgage Pool Fund. That's one where you can simply write a check, become a member of the fund, and allow us and our loan committee at Pacific Private Money to decide which loans that we're currently looking at and considering funding are the most appropriate for the fund itself.
Very good. All right, we're going to cut to a second commercial break here. By the way, if people are interested in this, it's funny, you mentioned 8%, and I have heard of a local bank that is FDIC insured that will pay you a whopping 1%.
Wow.
On liquid funds. You don't have to tie it up in a big CD,
really?
And it is FDIC insured. And for those people who are interested, who want to know the name of that bank, you're going to have to email edward@bestofinvesting.com and just say, which is the bank, the local bank that's paying FDIC insured 1% liquid. Okay? All right, here's our second commercial break. Before we do, we want to make a quick mention here for the Purple Orchid Wine Country Resort and Spa, which stands out among many hotels in, of all places, Livermore. Enjoy private fireplaces, jacuzzi tubs, and delicious breakfast during your stay. They also guarantee guests will feel relaxed and rejuvenated during their visit when they take advantage of their extensive spa. I've looked at the pictures, haven't been there yet, and they look fantastic. Take in the natural beauty of the Livermore Valley, enjoy the many local wineries. There's a lot of wineries there too. And taste some of the delicious restaurants in the area. There's something for everyone to enjoy during their stay. www.purpleorchid.com or call 925-606-8855. Okay, so now we're back. Now, so far, Mark, you are 1 for 1.
All right,
on
let's see if
trivia
we got 2 for
questions.
2.
Okay, let's see. This is old TV show intros. All right, cue up the spooky music. The waves are crashing against a rocky shore. Now cut to a view of a house set against a darkening sky. Name the show. All right? The first caller with the correct answer is going to win a free 3-day, 2-night stay at the Lighthouse Resort. Call 888-912-1190. That's 888-912-1190 to answer this question. Cue up the spooky music. The waves are crashing against a rocky shore. Now cut to a view of a house set against a darkening sky. What was the name of that show? Stay with us. You're listening to The Best of Investing. We'll be right back.
Ooh, you got pink water in there.
Oh, and not yet. That's going to be for after my workout.
Oh, is it?
You probably, Rick didn't get a chance probably to tell you about either of these meetings.
I saw the emails back and forth. Didn't get a chance to read them.
Okay. Because the one in Larkspur came from bank. Actually, both of them came from banks.
Oh, I did see the one where the woman spent wrote a big long
Yeah.
diatribe about every little thing she needed the money for. It's like,
Yeah, I know. She's a
I don't
little
care. All I want to know is how much money do
I
you
know.
need, and can I make the loan? Is it a consumer loan? It's like,
Actually, both are going to be consumer loans, but
Yeah.
they're going to be with the one in Larkspur is going to be great. I just hope we can get it.
Yeah.
All right.
I might just mention that the licensing that companies like Pacific Private Money are operating under
Got it. Okay.
regulated and licensed.
All right. Here we go. Welcome back to the Best of Investing. Again, I'm Edward Brown, your host, along with Mark Hunt, president of Pacific Private Money. Here was the second trivia question about old TV show intros. Cue up the spooky music. The waves are crashing against a rocky shore. Now cut to a view of a house set against a darkening sky. What was the name of that show?
I'm afraid I might not be 2 for 2. I'm going to say the Munsters.
No, Dark Shadows.
Oh.
Remember Dark Shadows? Okay, so
That's right, Dark Shadow.
off the air, we were just kind of talking about this licensing. You have to have a special license to do what you do.
Yes, you do, absolutely. And at the first segment, I mentioned that the private lending industry is much more regulated today than it once was. And in addition to those regulations, there are also multiple licenses required to make the kind of loans we do. First of all, most private lenders are either licensed real estate brokers from the through the Bureau of Real Estate, California Bureau of Real Estate, or they're California finance lenders, which are licensed through the Department of Business Oversight, DBO. It used to be called Department of Corporations, now it's called the Department of Business Oversight. At Pacific Private Money, we happen to have both licenses. We've got the California Finance Lenders License, and we've got the Real Estate Brokers License. We also have a third license that's actually recent and new in the last several years, and that's called the NMLS, for the National Mortgage Licensing System, NMLS. And so any residential consumer loans that are originated require the NMLS license. So we've got both individual and corporate licenses there as well. We're also subject to audit. We're very short order here undergoing our second audit under the Bureau of Real Estate. So these are things that kind of have legitimized the industry. And again, this is a good thing. So we are operating under the Dodd-Frank regulations. We are required to determine ability to repay. We can't just blindly lend money against the equity in your home. That is no longer legal. It was legal 10 years ago. It is not legal today. In fact, we've talked on shows before how it's really a pity that in some ways these new regulations have kind of caught in the cobwebs certain people that we would love to make a loan to, but we have to decline because we would risk our license or even risk being sued by the borrower themselves should something happen and things don't go as planned and they can't make the payments and they hire an attorney. The first thing that attorney is going to do is look at the underwriting and look at the file, and if we did anything that was outside of the regulations, we would be liable for fees and penalties and forfeiture, even lose our license. You're right. So exactly, it's not worth it. And but let's so that kind of legitimizes the industry. Let's talk a little bit more about the type of people who come to us for loans. And I want to share with you a little bit of my experience these past few weeks as I'm collecting information for my conventional loan broker. And well, first of all, did you know that they still want to see 2 years of canceled checks on loans that I've been making payments on?
Not just a statement from the previous lender that says that you've never been late?
They do get a verification of mortgage,
Okay.
but they also want 2 years of canceled
Old
checks. Old checks. So I don't know. I don't remember the last time I saw a canceled check, nor do
Yeah.
I remember the last time a statement from my bank sent me copies of canceled checks. So it was an arduous process of going online and digging through the menus, and one at a time, I had to get 24 months of canceled checks on each of 3 different mortgages that
Wow.
I've been paying on. That was one. Then they wanted to see verification. There was a period of time in the last 2 years where we rented a home while we were remodeling the home that we're living in now. They wanted to see verification of rent. Well, I paid that person via direct billing from, you know how you can auto pay or bill
sure.
pay. So I went, so they said, well, we still need to see that you made those payments. So now there's no canceled check, right? It was direct
Gotcha.
payment from the bank, from me to the
So I
company.
guess the bank statements are true.
Right. Well, no,
They don't have the name.
they don't have the name.
Yeah.
So I went and I put a report together that showed that I had made all of these payments to the landlord, but it didn't show the account number that it came out of. And this was a report that came through the bank's own website, so I had to call up my banker and ask him if he would, on their letterhead, write a letter stating that all of those payments that were made. I mean, it's just so archaic, you know. So the whole mortgage application process seems mired in the Stone Age. It doesn't take into account all of these new and easy ways to pay your bill. So just crazy stuff.
I could see stuff like that making certain borrowers who are sophisticated say, you know what? I don't care if it's more expensive. I want to go to Pacific Private Money just because they're not going to make me go through
Well,
that.
and that's and so that's the deal that I'm working on right now. This is a repeat client. Calls me up the other day, says, "Hey, Mark, I'm looking at buying a second home up in Truckee." And I said, "Okay, what's the address?" Because I love to pull it up, online. It's listed, so I can pull up the pictures. And gorgeous property in Truckee, beautiful home, listed for 1.4 million. He's not in contract yet, but they're going back and forth. They're negotiating. He's all so tell me what's the best loan you can do. And so we talked for a while. And he's a repeat client, so I'm going to give him a little bit of a break on the points.
Sure.
But on the note rate, there's only so low I can go because I need to provide a certain minimum level
For
of
your
return
investors,
for my investors.
Absolutely.
And hey, if I could get money at 6%, I'd lend it out at 7%.
Yeah.
But I'm getting money at 8 and 9%, so I generally got to charge between 9 and 10%. And so we're talking a little bit about that. And he's grinding me. He wants me to get the absolute best rate I can. But he basically knows. So I'll probably end up getting him a 9% loan. Loan's going to be around 70% of whatever the eventual price is, assuming that he gets his property. Again, we're not in contract yet. But I looked at I pulled up his file from about 6 months ago. We did a commercial deal for him. In fact, it was less than 6 months ago, about 4 months ago. I pull it up and I'm looking at his credit report. His mid FICO is 780. I look at his financial statement and he has millions of dollars worth of real estate. So he's not a pauper. And his income verification that we had was over $1 million.
Well, let me go back for just a quick second. One of the reasons he'll have a hard time getting a loan in a bank is because he owns millions of dollars of real estate,
Yes.
which he has loans on.
Right. That's exactly it. So I said, I don't want to use his name on the air for privacy reasons, but I said, why are you coming to me? Why don't you go to the bank? So I can't stand all the stuff they make me do. It never ends. I give them everything they want. They send me a list of 20 things they want. It takes me 3 weeks to put it together, and I give it to them.
And then 30 questions.
And then I get 30 more questions.
Yeah.
It's endless.
Yeah.
And
I'm going through that now.
I understand his frustration. You're going through it. I'm going through it. Look, I mean, we have Rob Spinoza on this show as one of our co-hosts. He comes around, and guys like Rob, they do their best to make it easy.
Sure.
And if you're not complicated or self-employed, you absolutely can get conventional financing in as little as 21 days. But I'll tell you, that's the exception, not the rule.
Yeah,
in fact,
exactly.
the average time right now we're up to. I just read the other day we're up to 45 days is the average length of time it takes to do a conventional mortgage.
Okay, and if that's the case, then the typical person who wants to buy, let's say, a personal residence, not too many sellers are going to be willing to wait 45 days when they can get an offer that'll take them 10 or 12 days.
That's
Right.
exactly right. So it's a catch-22 for a lot of people, and we live in a part of the country where probably we might have the largest percentage of self-employed people
Yeah.
here in the Bay Area. So, and that's one, and many of the loans we make, if not most of the loans to buy a house, are jumbo loans.
Yeah.
So
good
that also now puts you into a different class
Yeah.
of mortgage. There are different companies who specialize in making jumbo loans to people who are self-employed. And another thing, if you do, and this is something that I did that really drives conventional mortgage lenders crazy, is I move money around a lot.
Yeah.
I have a lot of different accounts. I don't have idle cash reserves sitting around because I like to invest it, as you do.
Yeah, absolutely.
I invest in notes myself. I invest in my own fund, constantly moving money around. They want to see seasoned money, right? And so, seasoned money, what are you talking about? Seasoned money is money that's just dead money. I mean, and again, a lot of guys here in the Bay Area, that's just anathema. So anyway, so there's just a lot of challenges around that. And, you think that there are not many people like, this client of ours. Well, you'd be surprised. There are a lot of people like that. They're just frustrated. And and many of these guys are old enough to remember when 10% was actually a really good rate for a mortgage. So, and certainly 8% was not a bad rate for a mortgage 20 years ago.
Yeah.
It's just that if you're young and you're just kind of getting into, maybe considering a home, maybe you're in your 30s, you don't remember because you were a kid or in college when mortgage rates were that high, and all you remember is mortgage rates at 3, 4, and 5%. So, borrowing money at 10 might feel like, a shock, but it's not. So, again, a lot of reasons why people use companies like Pacific Private Money, and it's not because they love the rate. They don't, but they're willing to pay it, and largely because they know it's really for a short term. It's a means to an end. It's a way to capture real estate today using a loan that is vastly easier to get, much quicker to achieve. And again, we can do transactions in a week. Find me a bank that can do that, and I'll be out of business.
Give out your give out your information one more time.
Pacific Private Money. We're at pacificprivatemoney.com. Phone number 415-883-2150. Don't need to bother you with my long email address because it's on our website. Our website's very transparent. It has our address, our local phone number, our pictures, our bios, all of our email addresses. Get a hold of us anytime.
All right, we're going to cut to our third and final commercial break. Before we do, did you hear about the guy who invented the hokey pokey and unfortunately he passed
Turn
away?
himself around.
Well, no, but it took 7 hours to bury him because he put his right foot in, he put his left foot in, put his right foot out. Okay. All right, here we go. Here we're talking here about old TV show intros.
See if I can go 2 for 3.
Yeah, I think you definitely will on this one. Okay, this is an easy one, so people get ready. Get your finger on the trigger of the phone because you got to be the first caller with the answer to this one. A man walks through 5 sets of security doors and enters a telephone booth. He dials a number and is promptly dropped through the floor. Name the show. Call 888-912-1190. That's 888-912-1190 to answer that question. The first caller is going to win a free 3-day, 2-night stay at the Lighthouse Resort. A man walks through 5 sets of security doors and enters a telephone booth. He dials a number and is promptly dropped through the floor. What's the name of that TV show? Stay with us. You're listening to The Best of Investing. We're going to be right back. I knew you'd know that one.
Well, I wrote Dawn Adams because the name of the show is on the tip of my brain, and so let's see if I can remember it. Although if I sit here and think about it the whole time, I'm not going to think about what I want to talk about in the fourth segment. So I'm going to have to
So we have
choose.
7 minutes and
Oh wow!
7 minutes and 29 seconds.
Maybe I'll talk about fund at the end.
Okay.
Dawn Adams.
Too late. No. Save file.
Maxwell Smart. phone in the shoe,
That's
the cone of silence, Agent 99.
I always had a thing for her.
Yeah, yeah.
And Emma Peel from The Adventures, remember
Yes.
her? She was a hot tamale. Of course, and then there was Anne Francis from Honey West. Remember that one? Maybe I remember all those shows. Okay, here we go. Welcome back to The Best of Investing. Again, the last time for today, I'm Edward Brown, your host, along with Mark Hunt. Here was our third trivia question. A man walks through 5 sets of security doors and enters a telephone booth. He dials a number and is promptly dropped through the floor. Name the show.
That man was Maxwell Smart.
Yeah, what's in the show?
Get Smart.
Get Smart. That's right, Chief. Got it. Okay, Mark, continue on.
So we're talking about the private money lending industry and mortgage investing, and we talked a little bit in the last segment about the types of people who come to us for these largely short-term loans, 10% interest rate, a couple of points, but vastly faster and easier to qualify for, and largely because we are like the banking industry of 50, 60 years ago. We take a subjective approach when someone comes to us with a loan application. Nowadays, with conventional lending, let's face it, you're a set of numbers. You're basically ones and zeros. You're a W-2, you're a FICO score, and again, when banks scale up and they do billions of dollars worth of deals, and they can't discriminate, they can't know the story, they can't care about the story. They just want to know what's the address, what's the value of the property, what's the profile of the borrower. It's very, it's just not a subjective process like it used to be. Like the old days when you walk in and shake your banker's hand and tell him you needed a loan, and you ask why, you tell him the story, and he give it to you. My dad used to get homes built that way in the 60s. He'd go get a loan with a set of plans at the desk of the local bank manager. Not anymore. Well, at Pacific Private Money, we still behave like the banker from 60 years ago. We listen. We get calls and emails every day. The fact of the matter is we actually do say no a lot because we're really kind of looking for certain types of loans, bridge loans like I talked about, people who are looking to buy a home and can't get bank financing for any number of reasons. Certain fix and flip deals. We want to lend in certain areas. We prefer Northern California. We don't not as comfortable in some outlying areas of the Bay Area or Southern California. And certainly out of state, we're really not playing around much with that. But the person calls us up. They tell us the story. We can generally within a few minutes know whether that's the type of loan we'd like to make. Now we're going to get more information. We're going to now start checking up on things. We're going to want a loan application, which again is pretty easy to fill out. We're going to want to pull credit. We're going to want to do a background check. We're going to want to get a valuation report on the property. A number of other things. Not quite the painstaking, nail-pulling process as it is to get a conventional loan. We still are collecting information, but a lot of it can be done over the phone, and a lot of it is very informal. And again, we like good stories. We want to know what the story is. And why do we want a good story? Because we're actually trying to determine the likelihood. What's the, how confident are we that this borrower is going to be able to pay us off? And the story helps us determine whether we believe that this person is going to be able to, take out our loan, pay the, higher than, average interest rate and the fees associated with it, and how quickly are they going to be able to either position the property for resale or refinance us out.
Which is one of the reasons you have an extremely low default rate.
Absolutely, absolutely. So let's talk a little bit, we got a couple more minutes left in here to talk about the Pacific Money Fund, which we hinted at. Our fund has been in existence for almost 3 years now. The vast majority of our 8 years in business, we were doing individual notes with individual investors, but 3 years ago we launched the Pacific Money Fund, and that fund was designed to pay out a yield right around the low to mid 8%, based on the types of loans we make and the interest rate that we normally charge. And to qualify, you need to be an accredited investor. That means you have to have a certain net worth qualification. I won't go into the details here, but if you give us a call, we'll see if you qualify. We ask that your minimum deposit into the fund would be $50,000, and we ask that you keep it in there for a minimum of 2 years. There's no fee to go in or out of the fund if you keep the money in for 2 years. We do have an early redemption fee. It's designed not to be punitive. And again, we can give you those details when you call up. We can or email us, and we'll just send you an executive summary. And if you like that, we have an offering circular and a subscription booklet that we can send you that provides all of the details and risk factors on how you can participate in the Pacific Money Fund and earn 8% or more on your money. Now, I always have to say this, past performance is not a promise of future results. I can't guarantee you that the Pacific Money Fund will continue to pay out 8%, but we did end the year in 2015 paying out on a monthly distributed basis an annual rate that equaled about 8.2%. Those people who didn't need to take monthly distributions, wanted that money to just sit there. Many of our IRA investors, for example, are not taking distributions. So you can allow the distributions to compound. So the compounded yield in 2015 was about 8.54%. We're going through the audit right now, so we'll confirm those numbers post-audit, but that was the numbers that we came up with, about 8.5% on a compounded yield. And again, one of the nice things about investing in a mortgage pool fund is that you can add money anytime you want. You can keep it in there as long as you want. You could also request a redemption when you want, and again, after 2 years, there's no redemption fee. So those are things that individual notes typically don't have. If you invest in an individual note, you need to keep that note, or maybe sell it potentially at a discount. You got to kind of go along for the ride, right? And if that guy stops making payments, well, you're not getting income on there, and then you've got
to go
issues.
through the foreclosure
Right,
process.
exactly. Which again might not be a bad thing. I have people who love foreclosing on property. In fact, I've got one of my longest investors. His entire portfolio is from loans that he got. So again, for more information, do visit us at pacificprivatemoney.com. We can send you information about how you can participate in the Pacific Money Fund.
Very good. All right, I want to make a quick mention to our friends at Pacific Trade Exchange, where it's business-to-business barter. Check them out. Decent company. I'd say a very good company. All right, here's our thoughts for the day. If a mime is arrested, do they tell him he has a right to speak? A little interesting there. And how can something be new and improved? If it's new, what was it improving upon? Right? Okay, tune in next week to The Best of Investing. We're going to be giving away more free vacations for answering trivia questions. Again, call Mark Hanf at Pacific Private Money, 415-883-2150 for more information about 8% or more. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long. Good.
Got those extra seconds in there.
Yeah, I can tell. Just a little tiny bit.
Yeah.
See, we can get you out of here so you don't have to rush through your